Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I want to continue along the lines of some of the things we've been talking about recently, such as the methodology in action, my next 100 trades. I have a mystery chart again this week, some follow-up on some things, a little bit about stock picking and a little money management. And I want to continue the one question that you must ask, or at least one of the few questions you must ask with trading, and that'll make sense in just a few minutes. And then housekeeping. I do take requests. If there's something you want me to cover, let me know. I also do a show every Thursday night. The time slot for this one is a little limited, but on Thursday nights, things are a little bit open-ended, so I can cover more in that show and cover more variety of topics. So shoot me an email, davelandry.com/contact, if there's something you want me to cover. It does make my job a lot easier as opposed to thinking what I think you should know. Maybe just tell me what you want to know. Anyway, if you want the slides for this presentation and all my other presentations and my books and PDF formats and a bunch of other stuff to keep busy for a long time, davelandry.com/StockCharts. If you want to join us on Thursdays for the live webinars, these are still being recorded. As you know, hopefully we'll be live soon once again. But anyway, you can join me at davelandry.com/webinar, and that's my trip. And that's my Twitter handle. All right, let's talk about the mystery charts and the methodology in action. We've been going through these next 100 trades. Long story endless. Someone called me out and said, hey, you're just showing the winners. Well, as I've said ad nauseum, on a winning trade, there's a lot of things to do. You have to manage, you have to take profits, you have to move stops. On a losing trade, you just pretty much let the stop take you out. There's a few other things too, but for the most part, you just have to get out of the way when necessary. So that's why I do focus a little bit more on the management of the winners. Again, a little bit more to do that. But I am showing my next 100 trades. And zero hindsight, these are either mystery charts, which come directly from my trading service, or possibly post to my Facebook group, which is Dave Landry's Trend Traders. By the way, you have to be at least a gold member of DaveLandry.com to participate in the group. That helps to keep the riffraff out. I'm half kidding. Warts and all, as you'll see in the last presentation or so, maybe a little bit in this presentation too, things are going a little bit bumpy. I am showing a representative sample, meaning I'm not showing every single trade I make, but I'm trying to focus, for now at least, mostly on the core methodology, and you might see some IPOs, which sort of dovetails in with the core methodology. But I am taking these trades in more than one account, and I might be taking some additional trades, but any trade that I announce, I will cover as one of these trades. So here's a mystery chart for this week. It's actually the same mystery chart as last week, and this is going to be my next big winner. I know you should never say hope, but that's what I'm hoping. Anyway, there were the parameters. Entry was here, stop is down here, and initial profit target is up here. So we'll wait and see what happens. So far, that one has not triggered a trade. And what I liked about this one, like I said last week, cup and handle, bow tie, which is not shown. Also, nice thrust from lows. And you have this TKO type of move here. Now, since the stock pulled back a little further, you'll notice that this week's entry is a little bit lower than it was. And original entry was above this TKO. And then now our entry is above this high here. All right, let's follow up on EMBC. Here were the original parameters. As you can see, entry, protective stop, IPT. Down here, 30.50, 26.50, 34.50, respectively. IPT is initial profit target. Risk is 4 points on this particular one. Nice thrust from lows. Nice little kind of a knockout move slash pullback. Triggers an entry, stop is down here. It came fairly close to the initial profit target. And on this one, because it was a fast move on the open, a little bit on the thin side, I got in a little bit late, and I also decided that it was a bit of a gift horse because it kind of went straight up. I decided to go ahead and take partial profits slightly bit early on this one. And you can see that it hasn't really done a whole lot as of late, but for the most part, it's starting to hang in there. It's sort of hanging in there is what I'm trying to say. When you do hit that initial profit target, you bring that stop up to break even on the remainder. And this is how you make a lot of money longer term, as I'll show you in 1 minute. You catch the occasional home run. And that's the secret sauce to trading, that taking the partial profits and trailing that stop, and also letting that trailing stop gradually loosen up over time. So here's Riot, another one of those trades. This is a form of mystery chart, if memory serves. It came directly from a trading service. By the way, if you want to look at these so you can say, well, there's definitely no hindsight in any of this stuff, go to davelandry.com/archives. And if you went through the archives on this particular day, you'll see these were my 3 recommendations. The first 2 didn't trigger, for what it's worth, but Riot did. Entry of 7, stop of 575, IPT of 825. And we were looking for 1.25 points, which percentage-wise is fairly big on this stock, but this stock is pretty volatile. So we did hit the initial profit target, and then as the stock moved in our favor, we trailed the stock higher. And I was hoping, I know you should never say hope in this business, but I was hoping this would turn into a longer-term winner, and we would be with it for a long, long time. But as you can see, unfortunately, it did stop out. So here are my trades there. You can see I got in a little bit late, and on the IPT, as a tiny bit early, if memory serves, and then the remainder I got stopped out of, as you can see here. And we'll take a look at those again in a spreadsheet in 1 second. I know you want to party with me here. I'm looking at spreadsheets. Verve was another one that was in the Landry list. And when I say the Landry list, that's my watch list for each day. And it was also an official recommendation. So anything that's an official recommendation, I take, which I will take. I take all official recommendations. I will show as one of the next 100 trades. So you can see at the bottom, entry 26, stop 18, IPT of 34, which seems kind of crazy, but this stock has an HV probably of about 115. If you want to look at the HV on these, by the way, you can use the ACP plugin. It's called Landry Volatility. My plugin is free. All you have to do is like this video, and you'll be able to get the plugin for free. Historical volatility in my Trading Simplified plugin is called Landry Volatility. It's not a proprietary formula. It's just simply historical volatility. The programmer just happened to name it Landry Volatility because he was programming it for me, I suppose. Anyway, so let's take a look at what happened here. When you hit the IPT, again, you bring that stop up to break even. And that way, if you get stopped out, barring overnight gaps, you will make money overall on the trade. You'll scratch out on the second loaf at worst. And at best, you ride a winner for a long, long time. And again, I'll show you one of those in 1 second. Here's Cron, another one of those stocks. You can see entry of 474, protective stop of 375, and IPT of 575. Once again, those parameters seem kind of wide, but that's what the stock calls for. And that's one thing I talked about in my Week in Chart show last week, is I have certain clients, at least newer clients, and they're like, well, Dave, I can't use no 25% stop. And it's kind of like the line from Caddyshack, then you don't get no coke, because some of these volatile stocks require a very loose stop. Now this one didn't work out perfectly, as you'll see here, but it did trigger an entry, and it came dangerously close, I think 1 cent within that initial profit target. Now when it gets that close, I don't split hairs. Now, one thing I didn't do, and based on just the tracking of this, we did bring the stop up to fairly close to break even. And one thing I didn't do, and I was trying to sort of mimic my trading service best I could, and even though I took a little discretion, I probably should have scratched out at break even on the remainder. And you can see the stock then came down and stopped out. So I took profits a little early, right around that profit target. And what I would recommend you do, by the way, is let's say you're looking for 575. I think it's what we're looking for in this case. Maybe set an alarm at 550 or something, so if you start getting close, you know that you need to think about taking some partial profits. So anyway, there are all my trades. We'll put them in a spreadsheet in 1 second and have a look. So how am I doing? Well, initially it was so far not so good, and then it was better and better. We went from being negative into black. And then now we're kind of back to so far not so good. Not really knocking your socks off just yet. Now last week we were up to 2,600, and that was from a loss. So there was a big swing in equity, and I was sort of hoping, and I know you shouldn't hope in this business, as I say ad nauseum, but I was hoping that this Riot would continue to kick in. You can see $1,800 gain. Now this is these are my actual trades, and what I've done is normalize it for the most part to a 100 grand account, except for possibly some of these S&G type of option trades that I took up there, which you can go in and watch the shows and notice a little bit more on that. But anyway, this is how we're doing so far, or at least as of last week. Now this week, not quite as good. As you can see, we slipped back into the negative column. And I think one thing that's going to be great about doing this, I know you probably want to party with me, right? But you're going to be able to see the ups and downs, and hopefully longer term, it'll work out nicely. And I believe that it will deep down, although, as I admitted a few weeks back, I did wake up on a Sunday night thinking, what the hell have I done? Woke up in a sweat. Like, what if I don't get those big winners? But they're coming. You never know when they're coming, though. That's the thing. As I often say, whenever I hit a drawdown and my wife starts wondering, hey, when are you going to come out of this drawdown? When exactly are you come out of this drawdown? It's like, babe, I don't know. And that's the thing about trading, is there are a lot of unknowns, but as long as you're prudent and you have a conceptually correct methodology, use a lot of money management, and in addition to being prudent, I guess you should also be disciplined too, and I guess those two kind of go hand in hand, then longer term, you should do well. So this is what I'm hoping for, and I know, again, you shouldn't use the word hoping, but I'm actually expecting this to happen, and I think that eventually it will. So this was the ARLP trade I took a long time ago. And remember, we start off with a swing trade. You can see we took partial profits back here in it for a couple of weeks. And then we trail that stop loosely and let it loosen over time to ride out a longer term trend. In an ideal world, all stocks would look like this. And if they did, you probably never would see my fat arse again. But I digress. Anyway, there's the actual trades. And this one was kind of cool because it had dividends, and I never dreamed that on a stock that pays dividend, because usually I'm trading these momentum stocks. Now, one thing that was kind of interesting is this turns out to be a coal company. I thought it was an energy company, but it's a coal company. And by the way, I had a client or two that didn't want to trade it because it was a coal company. And if you're trading, you need to just pick the best stocks and not have some sort of idea of what they should or should not do. Now, that's just me, and I have to have an open mind. I can't look at a stock like this and say, well, I'm not going to recommend that because I'm not a big fan of coal. But as you know, you got to burn a lot of coal to fire those to run those electric cars. But anyway, I'm confusing the issue with facts on that one. But all kidding aside, I'm glad that electric cars are getting better and better and better. And then maybe someday we'll have some renewable source of energy to run those electric cars. So don't send me hate mail on that. Anyway, the initial profit target down here, I may have gotten it a little bit late, and you can see I only got $763 on the initial profit target, but that's not where the real money is. That's just to keep you in the game, just in case you get that swing trade and get stopped out on the remainder. The real money is in the longer term trend following, and you can see here, and again, I've been in this one for about, I guess, a year and a half, as have my clients. And you can see 20,660 open profits. We started at $4.94. Actually, it's $4.89 if you got a little bit better feel than I did. And then mark to market early this morning was at $25.60. So that's much better than a poking down. Now, keep in mind, this is on, in this case, it's a real 100K account or thereabouts. In my trading service, it's a hypothetical 100K. So based on the hypothetical 100K, if you added all that up, the dividends, the initial profit target on swing trade, it comes to $22,823, knock on wood, based on a mark to market earlier today. Now, obviously, all of this is banked, so $2,100 and change has been banked. And then this is open profits. And as I discussed in last week's Dave Landry's The Week in Charts, if you're having trouble sleeping at night, you can go in and watch that at www.youtube.com/c/Dave Landry. And in that presentation, I talked about the fact that we could have as much as $5,000 open profits at risk. But that's okay. Longer term, you're going to do just fine, because if you go in and calculate all the times you had open profit drawdowns, and I'll show you that real quick. Like, for instance, from here to here, from here down to here, here to here, here to here, and then a little bit more extreme from here to here. Those equity swings are pretty big, but remember, you're giving up open profits. And as I discussed in last week's show, the weekend charts that is, Eckert and Dennis treated open profits differently when they were dealing with the turtles. It's okay for them to draw down open profits, but if they let a losing trade get away from them, they had a real problem with that. And I think it was Dennis knew that comes with the territory. You have to be willing to give up some money. And by the way, one of the things I said last week, and I've been saying this for the last 20 years, I get complaints from clients about giving up open profits. And so what I tell them is just send me all the profits from the trade and forget about that money you lost. Forget about at the end, okay? So let's say you went from 22,800 down to 50,000 or 18,000, whatever the case may be when you get stopped out. And you made 18,000 overall, but you gave up 4 or 5K in the end. And by the way, as I preach, all trades will eventually end badly, and I'll have to maybe add that into next week's Mind the Trade. Anyway, not one client has ever sent me a check for his profits so he could forget about the trade. So it just comes with the territory. And that's one thing I talk a lot about is acceptance. And that's something that I'll probably get back to over the next few weeks under the Mind the Trade segment. So this slide is left over from the last few weeks. Let me just get through it quickly. I have to be careful about observing things as they discuss with the quantum physics. I think it's a Heisenberg theory. When you start looking at these little particles, before you know it, you're making them bounce around. So your observation is changing the trade. So I would have to be really careful that I'm not locking in profits too early just to show some profits in next week's show. Now, discretion is okay, and you've seen that I've used a lot of discretion. Discretion is not every day, all day. It's just every now and then. It just happens on the last few trades. We had quite a bit of discretion. And I'll flesh that out as it happens. It does show the Einstein versus Churchill of trading. Einstein's definition of insanity is doing the same thing over and over again and expecting a different outcome. Churchill, the quote there that I'm referencing, is that success is going from one failure to the next without any loss of enthusiasm. So you kind of have to constantly question in your head whether or not you're the definition of insanity or you're just being prudent. As long as you're picking the best stocks and you're doing a post-mortem on every trade and looking at it carefully, then it's okay to be willing to feel like sometimes you're Einstein's definition of insanity by going into the new trade and doing the same thing over and over, because eventually, over time, it will work. Now, speaking of working longer term, the core methodology, which is just trend following, and that's one thing I talked about in last week's, not the last week at Bandcampy, but that's one thing I talked about in last week's Dave Landry's The Week in Charts, is all representative methodologies will look a lot the same, and they all will have a lot of the same nuances. Now, one of the nuances of trend following is it doesn't work all the time, but it does work over the time. All right, let's shift gears and talk about Mind the Trade. As I said last week, your life will spill over to your trading, and your trading will spill over to your life. And you have to be cognizant of these things. And it can also have a negative feedback loop. If my trading is going poorly, then I go home and I'm grouchy. And if I go and I'm grouchy, then my wife Marcy might get a little aggravated with me and I might be a little bit more grouchy. And then I come in and those things are influencing my trading. My trading gets worse. My life gets worse. And you can see it could create a negative feedback loop really quickly. Now, a very important thing to ask yourself before going into any trade is, does your trade pass the transformer test? Now, what do I mean by that? Well, years ago, I worked in a job and I was pretty miserable. And I guess if it wasn't for that job, I wouldn't be here today. If the job was maybe a little bit less miserable, I'd probably still be there making transformers, except the plant no longer exists. Corporate would come down once every 3 months and they'd show us slides on how much we lose per transformer. And okay, now we were losing 350 per transformer. Now we're losing 360, and now we're only losing 325 per transformer. And I really wanted to raise my hand and say, how much are we losing per transformer? $325, whatever it is. Like, okay, what if we just quit making transformers? But I digress. Anyway, long story endless. I was in charge of taking someone's code, which was spaghetti code, for those of you who know how to code, and it didn't have much comments, and I had to figure out what this guy was trying to do, and he gave up and quit, went to be a dentist, but that's another story altogether. And long story endless, I had to talk to accounting quite a bit, and there was a very sweet young lady who worked in accounting, and she was, I guess, VP of accounting, and she had all the answers, and she was wonderful to work with, but the problem is getting to her wasn't easy, because if I would call her, somebody in the office, one of the two girls outside of her office would answer the phone. One was from the same department, one was from another department, and to make matters worse, the guy who worked next to her would also answer the phone. Now, it's very efficient, or more efficient, I should say, for me to leave a long, detailed voicemail, and then she could listen to the voicemail, and then if I'm not in my office, leave me a long voicemail, and then I can get back to coding. But unfortunately, all these people would catch each other's phones, and I can't explain some long process to someone, especially if they're in a different department. It was just much easier for it to go to voicemail. Anyway, I was up there once, and everybody's sitting around eating lunch, and I'm like, why can't you just let the phone go to voicemail? And one of the girls piped up, well, what if one of our kids breaks their arm at school? Well, we need to know about it. And then I immediately said, what does that have to do with making transformers? And they weren't very happy with me, and I was kind of half kidding, but anyway. So you need to ask yourself, what does your trade have to do with actual trading, okay? Does it pass the transformer test? Now, as we discussed last week, you're looking at a trade that looks pretty good, and you may have time to trade, or you might be busy or distracted. Like I said last week, I know someone that he trades when he has time to trade. He trades when he has a free 30 minutes before work, and then he goes off to work. Maybe on a holiday, that's where the markets are open, or a sick day or whatever, or if he wakes up in the middle of the night, he'll start trading. So that might not always be the best time to trade. But anyway, you might be upset with employees, co-workers, or your boss. You might have injury or illness. You could have a fight with your spouse, significant other, or both. If you have both, you probably shouldn't be trading. And have money or need money. So you need to ask yourself all those questions. If I'm really trading well and I'm flush, I might get a little wide and loose and frivolous with my trading as opposed to being disciplined. If I need money, I might try to force a trade to happen. And as I said last week, or you're hungry or you're full, that's another thing that can really affect your trades. And as I learned, sometimes I'll be out of the office and I walk into the office and all of a sudden everything looks great and I'll make some trades. And then it took me a while to realize what it was I was feeling better after coming back from lunch. And they actually did a study where judges gave far more lenient sentences when they were full after lunch than right before lunch when they're hangry. So you need to ask, what does this have to do with that? Now, if you get back to trading, again, your life will spill into your trading and your trading will spill into your life. But if you just had a string of winners, a string of losers, if you just missed a huge trade, if you took a way too risky trade and it paid off big, it will affect your next trade. Right now, for instance, I'm a little skittish because I hadn't had a whole lot of big winners lately. A little nervous that I'm going to have yet another losing trade. Sometimes it seems like others seem to be printing money and you feel like you're being left behind. FOMO, the fear of missing out, can really mess with your trades. You may have just micromanaged yourself out of a winning trade. You may have fat-fingered an order. And there's a whole bunch of other bad trading behavior that you might have just gone through. You might have just missed an initial profit target, and instead of winning on a trade, you end up losing. or you might have let a stock blow through your protective stop. So all these things affect your trading, but they have nothing to do with your next trade. So again, what does this have to do with this? So I would encourage yourself, once again, to identify what's going on in your life and what's going on in your trades and how the two are related, and also what has happened recently with your trades going into the next trade. You have to look at that trade, that new trade, in a vacuum. And believe me, if you figure out how to do that without any stress, let me know. Well, that's it for this week. I'm going to pick up on this and give you a lot more tips and tricks to deal with those and many other psychological issues with trading. Also, obviously, I'm going to continue to follow up on my next 100 trade series. Again, if you need information, follow-up information, go to davelandry.com/StockCharts. If you need to reach me, davelandry.com/contact. I want to thank everybody for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.